All right, so last time we covered accruals and we got into the trial balance. Again, the trial balance, that adjusted trial balance, that's what we got into. And we put it in that video. But today we are going to expand a little bit on that. So the trial balance, as we all know, just ensures that the debits equal the credits, and that's it, okay? The adjusted trial balance is one step further from the vanilla trial balance because the adjusted trial balance is prepared after all the adjusted entries are prepared, right? Are journalized and posted, and then you prepare the adjusted trial balance, and then you can prepare your financial statements. So this is what the trial balance looks like, the adjusted trial balance, just like the trial balance, okay? Your assets are listed first, then liabilities, then all your stockholders' equity accounts, which include your revenues and expenses and all that jazz. Okay. And we'll see how these operate in relation to one another and how you can prepare the financial statements from them. So which financial statements can you prepare? You can prepare your income statement, your retained earnings statement, or statement of stockholders' equity, and your balance sheet directly from the adjusted trial balance. Okay. Um, you should start with your income statement, okay? So that's going to be everything that you see right here, your service revenue, and then all your expense accounts, whether they be original accounts or accounts that you just started due to the adjusted entries, okay? Your revenues minus your expenses, again, that is going to equal your net income. Net income is just your revenue that is left over after you've taken out all your expenses. That transfers over to the retained earnings statement. You start with the beginning retained earnings. Okay, if you had it. If you don't, then you just put a zero there. You add your net income, which is gotten from your income statement for the current period. Then you have your adjusted retained earnings. Excuse that beep and sound. And then you have, you subtract dividends. Okay, subtract dividends, which is right here. In this case, it's 500 buckaroos. And then you arrive at your retained earnings for the end of the period. Okay, in this case, it's 2,360. That transfers over to the balance sheet. Okay, under the stockholders' equity. So you see the retained earnings transferred over to the stockholders' equity. Your common stock also goes under stockholders' equity. In this case, it was 10,000. So stockholders' equity in total is 12,360. All your liability accounts are transferred under liabilities and totaled, and they total 9,550. Then you have all your asset accounts. They are all added. Okay, they are all added to each other, with the exception of any contra asset accounts. Those are subtracted from the respective asset account, and then you arrive at a net figure there, and that's added to all the assets. Okay. So contra accounts are subtracted, okay? Contra accounts are subtracted. They go the opposite way. That's why you see accumulated depreciation, for example, is a contra asset account. It's listed on the credit side on the trial balance, okay? And if you know what it is originally, what element it falls under, assets in this case, but it goes the opposite way, then when you go to the statements, you can subtract it when you go to the statements. In your mind, you should already know that you're going to subtract this account, even though it belongs under assets. You're going to subtract it from assets to arrive at a total figure there. Okay, liabilities, we didn't have that issue here, so we just added all of them. And then stockholders' equity, you kind of got to work your way backwards all the way to the income statement, and then the retained earnings statement to get some amounts. That are ultimately going to end up on the balance sheet. Okay, notice 21,910 does not equal 30,190. Okay, 30,190. Okay, so and the reason why is because on the trial balance we classified these accounts based on if they are a debit or credit, regardless of where they fall under. There are no subtractions you see here, right? The debit side is all added together, and the credit side is all added together, okay? So no subtractions here. They're just added, and that's it. For the financial statements, this is when you actually do the subtractions. Remember when we were talking about the equation analysis or tabular analysis? This is where it happened. The cumulative depreciation was added, okay? It increased, the cumulative depreciation increased, but when it comes to the financial statements, we are subtracting it here. So there's an imaginary negative sign next to cumulative depreciation. And usually, uh, it'll have parentheses around it. That's parentheses means a negative when it comes to accounting and the financial statements. So that's why you see it's subtracted here. Okay, so when it comes to the financial statements, you were talking about the accounting equation in totality. Okay, um, liabilities all increased, so no issue there. They're increased, plus signs all added. Okay, no contra counting. Um, if we go back to the income statement, okay? When we were doing equation analysis or tabular analysis, we said that salaries and wages increased, supplies expense increased. Yes, the individual accounts increased, but when it comes to the totality, okay, totality, we have to subtract these expenses on the financial statements. Add all these expenses and subtract them from revenue. Okay, so there's an imaginary negative sign or parentheses, which there should be, if you were technical accountant, and then they get subtracted from revenues, and you have net income. Okay, and then dividends, again, in the period, okay, when we're doing equation analysis, we are saying that dividends increased by 500. That's how much we paid. But when it comes to the financial statements, we are subtracting dividends, okay? These numbers all come from the adjusted trial balance, which in reverse comes from the ledger, right? Okay? It's just adding on steps, but there is repetition. Okay, they still come from the ledger. Now we can take a look at an example of a trial balance. Okay, so here for this trial balance, um, we have Skolnick was organized on April 1st, 2017. The company prepares quarterly financial statements that adjusted trial balance amounts at June 30th are shown. Okay, so quarterly. Okay, so they didn't go by months this time. They went for 3 months. That's what a quarter is. It's 3 months. April, May, June. From April 1st to June 30th. Okay, so they give us all these accounts, okay, and all these numbers. Okay, so this is the adjusted trial balance. Okay, so thankfully we don't have to do any adjusted entries. So it says it just wants us to prepare the financial statements, basically. Determine the net income for the quarter, April 1st to June 30th. Determine the total assets and total liabilities for Skolnick, and determine the amount of retained earnings. So we'll work backwards and go to the income statement. What are our revenues? So you can go back here and take a look and see where your revenue account is. Is there only one account or there are multiple revenue accounts? So there's service revenue and rent revenue. So there are two revenue accounts, and then everything that says expense is an expense account. Okay, so 1400, 800, those are our revenues. So we go back to the income statement and plug those in, and then we have total revenues. And then you grab everything that says expense next to it from the adjusted trial balance and put it under expenses, total that up, and then you subtract your total expenses minus your total revenues, and then you have your net income. Okay, your net income. Then you go back to that adjusted trial balance and see if you have a retained earnings amount. Do we have retained earnings on that adjusted trial balance? We do not. So what that tells me is that when we go to prepare the retained earnings statement, okay, the retained earnings statement, we're going to have 0 for beginning retained earnings. Then we add our net income, which we calculated here, okay, we add our net income. Then we subtract out the dividends. The dividends were stated on the adjusted trial balance, which is right here, this dividends amount of $600. So we put that here, and our retained earnings is $1,890. Now, that gets transferred over to the balance sheet, or actually, in this case, we didn't have to prepare a full balance sheet, because if you read the instructions, it just wanted the total assets and total liabilities. So that's real easy. You can go back to your trial balance and just add up all your assets. They're listed in order. So we have from cash all the way to equipment. Those are your assets. Now, we will see if we have any accumulated depreciation. Remember, accumulated depreciation gets subtracted. So you add up all your assets, subtract out accumulated depreciation, and that is your total assets, okay? For liabilities, it's going to be everything from notes payable to um, unearned rent revenue. Unearned rent revenue, again, remember, is a liability. So if it says payable, then it's a liability. And then the only difference is this unearned rent revenue, which is also a liability. So you add all those two together. You add all the assets together, unless it's contra asset accounts, and those two numbers should match each other. And we are done for this. Okay, so that's an example. Hopefully that helps you out with this trial balance jargon. And I will see you on the next video, and we'll move on to step, I believe, step 8 of the accounting cycle. Step 8 of the accounting cycle. And we'll keep continuing this series until you get this stuff. So anyways, like, subscribe, comment, share, all that good stuff. See ya.